The market sucks right now. We can see NVDA down 20% year to date, Microsoft down nearly 10%, Amazon down nearly 12%, Google down nearly 18%. But what if I told you that while the market sucks and maybe your portfolio is in the red, I believe this is the time when money is made. And no, I'm not talking about shorting stocks. I'm not talking about doing some crazy option trading, some crazy get rich scheme where you're going to have multi-million dollars tomorrow or next week. That's not it. But I believe that in today's episode, I'm going to take a closer look at 9 companies that in the next 5 years have a really high chance of being much higher than they're at today. And as a long-term investor, right, that is what you should be excited about. You should be excited about buying companies that you know have various growth opportunities, companies that have various markets, various customers at the moment, and are selling at cheaper prices than they were at the beginning of the year. Because in the long term of things, if you do believe that the market will continue to grow, these 9 companies can benefit. And again, I'm not saying all 9 stocks are going to be massive winners, but I do believe a good probability that these are going to outperform the market in the next 5 years. Some of them dramatically and some of them just by a bit. And this is unfortunately, if you are kind of a new investor, and if this is kind of like your first hyper bearish cycle that we're seeing and high bearish volatility market, you might think that this is game over. Unfortunately, most new investors, when they experience the first bear cycle, they end up leaving. Most experienced traders, if you've been here for a while, let me know in the comments below. Most experienced traders right now, or investors, are the ones that are excited right now because they're able to buy companies that they're very excited about at a cheaper price. And when thinking about stock investing, right, the easiest thing is think about it as a business. When would you want to buy ownership in a business? When the valuation of that business is much higher due to various excitement, or during the time when you can buy that business at a cheaper price and you still believe that they have multiple growth term opportunities in the future, even if the short term might look a little weak. I don't know about you, but for me, I like to buy the latter when I can buy them cheaper, I can buy more shares, and I do still see various growth opportunities in the future, while the short term might have a lot of bumpy roads. So if you are a new investor, hopefully by the end of this episode, you haven't given up on the market. I think that's the worst thing to do. And I don't really want to do a kind of fear-mongering video because, again, I want the community to grow. I love discussing stocks, right? That's all I really do. Obviously, I focus on the semiconductor space. I focus on the tech space. I focus on the AI space, but I love to learn from everybody. So I know that was a long intro, but let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so the 9 stocks we're going to look at are Microsoft, Amazon, Meta Platforms, Alphabet, Vanix, Semiconductor ETF, Oracle, TSMC, NVIDIA, and AMD. We probably are not going to agree with all these companies, and maybe some of you guys might hate some of these, but overall, I think the thought process is the same. Big tech usually tends to outperform the market, and during sell-offs like these are probably those plays that I enjoy getting into because they have a high probability of succeeding in the future. I mean, from the past year, Microsoft is down nearly 19% from its all-time highs. Amazon is down nearly 20%, Meta down 21%, NVIDIA down 26%, and you can see the list here from on and on. AMD is the one down the most, about 43% from its past year high. And again, a lot of people might not like AMD, but I do believe all these players can benefit dramatically. Now, I know this is not a semiconductor episode, but if you want to learn about the semiconductor space, check out whatthechiphappened.com for free daily semiconductor newsletters. I wanted to show, and I'm not going to look at all of them, but in the past, this is since 2010, so for the past 15 years, we have seen volatility in these big tech players. Right now, for example, Google is down roughly 25% from its all-time highs. There have been moments where Google has been down nearly 50%. We can see that during kind of 2022. During the COVID blip, we saw it down nearly 30%. And other times we see it down about 15 to 20%. So this is one of those few times where Google has pulled back a nice amount. But it's not the only time that has happened throughout the past 15 years. I mean, we can see the same with some other giants. Let's look at NVIDIA. NVIDIA, unfortunately, is one of those giants that has seen multiple 50% dips in just the past 10 years. And again, I think all this is possible, but what I really wanted to show is at the end of the story, these companies have a high probability of getting to new highs. And I'm just going to show one more. I'm just going to click random one. Amazon. Amazon is down right now 20% from its all-time highs. But we have seen this company has seen at least 20% dips 1, 2, 3, 4, 5, 6, at least 7 times in the past 15 years and has seen new all-time highs. So this is more to show that data that, hey, look, even with massive drops, there is that huge probability of seeing great returns in the long term, as these companies would have all reached all-time highs through all these dips. And the other thing I want to kind of look at is many people are saying, hey, look, Jose, this is a bubble. These stocks are trading at crazy valuations. I'm going to look here at PE ratio forward 1 year, forward, which is the end of this fiscal year. Right now, we are already sitting at the end of March, so we're entering 4 months. Most of these companies, not all these companies, typically follow a fiscal year of a calendar year. So with these are expectations within the next 8 months or so. Again, some companies like Microsoft tend to have a different fiscal year versus calendar year. But overall, Alphabet sitting at 17 forward PE ratio. Alphabet is one that I feel is super, super attractive right now. TSMC 18, AMD 22, Meta Platforms 22, Oracle 23, NVIDIA 24, Microsoft 28, and even Amazon, a massive, massive expensive company trading at forward PE ratios of 30. I mean, I'm going to say I don't think any of these are sitting at any crazy valuations that would scream bubble to me. But that's just me. So for me, all these companies have various growth opportunities. And I'm just going to give a few lists here. So for Alphabet, what am I super excited about? The advertisement market is going to continue to grow. YouTube is going to continue to grow. Their cloud market is going to continue to grow. And they're doing really well with Gemini. TSMC. Quickly, the overall demand for chips are going to continue to grow. We need more chips on phones, on laptops, on eventually the future of robotics, on future autonomous vehicles or smarter vehicles. The demand for chips are going to continue to grow. TSM is going to be a great player. AMD obviously in the AI space, but I'm really bullish for them in the CPU and the embedded space, where I do believe we can see growth there. Meta Platforms, very similar to Google. I believe the advertisement market is going to grow, and I also believe Mark is a great CEO, and he will continue to lead this AI race with Llama, and we're going to see some crazy, crazy announcements from Meta in the next few months. Oracle is a massive AI infrastructure player, sitting at cheaper valuations than some of the other infrastructure players. I like Oracle. They have that great partnership with OpenAI and the Stargate. NVIDIA is probably one of those scary ones that you really, 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 really have to be bullish in the AI space. But I am super bullish that the AI market is here. I am super bullish that within the next 5 years, the AI market is going to look completely different from where it's at right now. And that's why I put NVIDIA in the list. I would say probably the two biggest confrontationals or kind of companies that maybe investors might not like would be NVIDIA and AMD, as they are really dependent in the AI space. Then we have Microsoft. Microsoft overall, in my opinion, they're going to do well with OpenAI. They are definitely going pretty good in the cloud infrastructure space, and the productivity with Copilot and AI agents, I think they can be a massive winner here. Amazon, the e-commerce system growing, the advertisement market growing, the AWS system being a leader and growing. Overall, everything else that Amazon does, right? So all these have various growth opportunities that, while we might have some hiccups right now, we might have some hiccups within the next 6 months, we might have some hiccups within the next year, I believe these companies are ones that I wouldn't mind buying more, increasing my overall opportunity. And there's two here that I don't own. Amazon I don't own, and TSMC I don't own. But as soon as I can, those are two that I'm going to add into my portfolio, as I do believe things are pretty attractive. So this is, to me, again, it sucks because unfortunately most investors and most people, they buy stocks when everybody's super excited about them. And when are people super excited about stocks? When they're sitting at all-time highs. That's typically when I get the most views on YouTube. When do I get the least views on YouTube? When the stock market is down, when stocks are red, when everybody's talking about a bearish cycle. And that's usually the time when we have least investors. And unfortunately, and that's crazy, right? Because that's the time that makes the greatest returns. If you buy during the bear cycles, if you're able to withstand these bearish cycles, and the way you do that is by not over leveraging, by not needing the money anytime soon, by not making quick rich schemes that are just going to go from 0 or 100. There's no in between. When you don't make those types of plays, then you have the opportunity to buy at cheap prices. You have the opportunity to kind of last through this bear cycle. And then when things look really good, you get to say, hey, look, I bought NVIDIA when the stock was down 30, 40% whatsoever. That's when I increased my major position on a lot of these companies. In 2020, in 2022, when we kind of saw those down cycles, one due to COVID and one due to over inventory corrections, and those have been the best times to purchase. And I think if we continue this cycle, and I'm not saying this is the bottom, I believe we can continue to get lower and lower, but regardless, if you are patient, I am patient, I believe I will have better returns in the long term of things. So hopefully this maybe calmed a little bit the minds of investors. If you are a typical watcher, there wasn't much data here, but I think sometimes we just love to communicate with the community. So any comments or any advice some of you might have for new investors or old investors, make sure to let us know in the comments below. Take care, have a good day, and see you all next time.